want time to work in your favor. So when we talk about wealth not growing the way we want it to, it's not usually because you're wasting money. It's usually because you've wasted time. The more time you spend not connected to some sort of investment vehicle, the more wealth it kind of passes you by. So I want you to be very time conscious. And the options market is amazing because they literally put a value on time. They tell you, okay, you want an extra week? Here's how much it's going to cost. You want an extra month? Here's how much it's going to cost. Right. So that's beautiful. Implied volatility is another variable that moves options prices. And that's just, what's the chance that something is going to happen? Options that are boring, that don't have any chance of anything interesting happening, don't sell for very much. It's like buying tickets for a boxing match that you know is going to be a boring boxing match. That was the problem Floyd Mayweather had. Everybody knew he was going to win. They knew he's not an exciting fighter. If you know, I don't know a lot about boxing, but my boxing friends tell me he's not the most interesting fighter in the world, but he's super technically sound. His technique is perfect, but it's not very entertaining. It's not like watching Mike Tyson where you know that you're just guessing, okay, is the guy going to get knocked out in 30 seconds or 45 seconds? Floyd Mayweather, sort of systematically takes down the fighter, and a lot of people didn't want to watch the matches. They're like, we know he's going to win. We know it's going to be boring. There's not going to be a lot of volatility. But if you imagine a situation that is really exciting, like a big rivalry, or two guys that really can't stand each other, a white guy and a black guy, and they've been throwing racial slurs back and forth, and you never know, you don't know who's going to win. That has implied volatility, where it's like, well, who's going to win? It's anybody's guess. Well, a situation like that might drive more interest because of the implied volatility. So to go back to stocks, if you have an option on a stock that has a lot of movement, like for example, this week Oracle has been just going gangbusters, right? Oracle went up 40%. Well, Oracle, if you tried to buy Oracle stock or sell Oracle stock, you would get a warning. Robinhood was warning people. They said, look, I'm looking at it right now. I looked up Oracle and it says this stock has recently experienced elevated volatility. And it moved 6% in a day, which is a massive, massive move. And just in case you want to know what I did with Oracle, I did buy options on Oracle. I bought put options, which give me the right to sell the stock at a lower price. I bought puts because I felt that a 40% increase in the stock price was highly irrational. I don't believe a stock can sustain itself if it rises by 40%. And so far, I've been correct. Maybe I'll continue to be correct. I have no idea, but I know that this put so far, let me see, what kind of ROI did I get on the put? I guess I made something like 59% ROI on my investment. I invested about $1,700, and it looks like it's worth about 2,700. So hooray for me, right? We got this one right? And now at this point that I own this option, and again, this is not something that I consider to be a standard investing strategy. To be quite frank with you, even though there's some fundamental analysis here in terms of my perception and my understanding of market overreactions that drove my decision, I could have been wrong. I could have been wrong, and I think it's really important to just know that. So really, it wasn't just the investor in me that made this move. Part of that move was made by the gambler in me. I don't like gambling, but I was like, hey, there's some action here. This is really interesting. I want to be a part of this, but I ain't buying that damn stock because that thing went up 40%, and I don't believe in fairy tales. So my particular disposition as an investor led me to say, let me get some puts on this thing. Let me just see what happens. So I bought a deep out of, excuse me, a deep out of the money put.